and it's light. So welcome everyone again. It's Marcel here. Welcome in the backtesting session. Okay, in this session we will start to backtest a random day from August. What day is it? The 4th of September. Okay, so we'll be able to backtest a random day from August, and I will just quickly generate random number on my phone. Please bear with me. Random number generator. Okay, August is I believe 31 days. Yeah, no, it was 30 days. No, 31. Yeah, okay, so 31. Okay, generate. Okay, 15. What day is it? 15, 15, 15, 15. Okay, that's a Monday. Yeah, that's a Monday, right? Please just double check it. It's a Monday, right? So August 15th is a Monday, so it will be a good day to backtest. Yeah, double check it. Perfect. Okay, so we will backtest 15th of August. Where is it? 17, 16, 15. Okay, so here's 15th of August. Let me just go back to the 1 hour chart and replay it here. Where was it? 15 before New York session. Okay, perfect. So this will be the chart that we will be analyzing. And before we start this, you know, the deadline for the homework has ended. So you cannot submit your homework anymore. It has been ended. And around a little bit more than 100 of you guys submitted the homework. So actually, lots of you guys made the homework. So congratulations. And here's the statistics. Here's the statistics about the backtesting. You know, I had a question. I had a poll that how many times in a week do you backtest in average? And here's the statistics about your answers. So as you can see, never. Only few people actually chose that they never backtest, and this is completely wrong. You should always backtest at least one time. I mean, not one time a month. That will be actually below average, and that will be shit. You wouldn't be able to actually make progress with one time a month backtesting. But you should at least backtest one time a week. And this answer is completely wrong. So second, few times a week, I mean, few times in a month, as you can see, this is also not really relevant. So only few people take this. And the majority of you guys have actually ticked the only on the weekends, weekly, and daily. And actually, the majority of you, so 60% of you guys, think that you're backtesting 3 or 5 times weekly and daily. So actually, that's pretty good. And how much? 84, 86%, almost 87% of you guys are backtesting on every single week. And yeah, that's actually pretty good. You should keep these statistics. You should keep this average, and you should keep backtesting like this. And to the few people who take the never or the few times a month, if you're here and you're listening, please try to boost this up. Try to boost it up, because never is actually, you know, it's not a solution. If you're never backtesting, then you should actually cancel this membership. You should cancel the subscription and leave the flipping markets, because without backtesting, you won't be successful. So if you won't start to backtest, then you should right away cancel the subscription and leave this membership. Because if you're doing this kind of backtesting, so you're never backtesting, then this isn't your place. Because in flipping markets here, you should backtest. You should backtest at least one time a week, but even more. So yeah, but if you're here, please just boost this number up. Try to backtest more. And you too, try to backtest more. I believe there was like 12 or 10 people who ticked these answers. So please try to boost these numbers. So let me just close my window. Just a minute, sorry. Okay. And that's it. I just wanted to share the statistics with you guys, because actually it's pretty interesting to see how many of you guys backtest on every single week, every single day. And yeah, thank you for the homeworks. I will actually announce the winners, not the winners, but the best homeworks tomorrow. So, you know, the 3 best homeworks. So the first 3 homeworks, first most detailed homeworks, will gain a point. And whoever collects 5 points earlier will actually win a backtesting session, not backtesting session, sorry, one-on-one session with Shansi. So yeah, keep making your homeworks, because if you collect 5 points together, you are winning a one-on-one session with Shansi, and actually the cost of one one-on-one session is $150. So technically you are winning $150, but backtesting worth, I mean, one-on-one call session worth even more, because it's not the price, it's the value you're gaining from that session. So moral of the story, keep making your homeworks. It will be rewarded not just by the one-on-one session, but with your own, but by your own progress. If you keep making these homeworks, you will make progress. You will be better. You will train your eyes. So yeah, actually, just a question. Did you like the new themed homework? Did you like this homework? You can just stick the answer on the screen. Okay, so you were liking it because, I just created this new homework stream that you have to submit it via the Google Sheets. And yeah, these are a bit more complex homeworks, but these are better to train your eyes. So let's just start the backtesting session. And let me just double check it once again. Which day was it? 15th of August, right? Yeah. Okay, it was 15th of August. So what do we do before starting a backtesting session? What should we do before every time we start a backtesting session? If you know the answer, please raise your hand. Arash, what should we do?
Check the news.
Exactly, man. Thank you. Before every single backtesting session, every single case study making session, every single live trading session, we should check the news. So we will just check the August 15th news. Here it is, apply settings. And on this day, as you can see, there are no high impact news. I mean, there were no high impact news. So this will be a pretty much tradable day. And let's just start the analysis on the 4-hour chart. And I believe, Shansi, you made the backtesting video of today about this day, right? About London session.
Yeah, it could be. It may be posted to the backtesting.
It was the 15th.
Channel. Yeah, 15th and 16th also. So yeah.
Shansi backtesting. Yeah, you made a backtesting video about this, about the London session. So the New York session will be backtested too. So Shansi backtested the London session, and it has been posted a week ago maybe. And right now we will test the New York session. So let's just begin on the 4-hour chart. What can we see on the 4-hour chart? As we already know, I just deleted everything from the chart, expect these two supply zones. As we already know, price is reversed here on a 2002 weekly demand zone. I won't just draw it again because lots of time has passed by. So we already know that here was a demand rejection from 2002. And after this demand rejection and after a liquidity sweep, after a 1.000 psychological level liquidity sweep, price just reversed to the upside immediately and started a bullish order flow, which was leading to a supply top here. Okay, but don't rush. So here was a reversal. Here was a reversal because this was the 1.00, as you can see, 1.0000 psychological level where price collected liquidity. And after this liquidity collection, it has been swept and a reversal has happened immediately. After this, price has just mitigated this less recent valuable supply zone. Question, why is this the less recent valuable supply zone and why this isn't the less recent supply zone? If you know the answer, raise your hand, please, Michael.
That supply, it made IFC, and the lower one just is part of liquidity.
Exactly. Thank you. Perfect answer. As you can see, this is part of the liquidity, this liquidity, and this liquidity also. So this can be the perfect supply zone in this case. So technically, the right supply zone, the valid supply zone for us is this one above the liquidity line. And price just recently mitigated it right here and gave a rejection. As you can see, gave a rejection. And it couldn't break below the less recent demand zone right here at this region and couldn't break over this less recent valuable supply zone. So it rejected it on several times, couldn't break below the demand zone, also rejected several times and created a range technically. So here was a downside range, here was an upside range, right? So the upside range has not been swept by this movement. We can actually see that this wasn't a sweep. This was actually just one more liquidity, one more tap for the liquidity. And after this, price had just swept this liquidity to the upside with this movement, and it rejected on a 15-minute supply zone at this region. Let me just show you that 15-minute supply zone. Actually, we thought about it several times in the past. So this was the supply zone that gave the rejection after a liquidity sweeping movement. It's actually just a simple decisional supply zone that flipped the demand zone at this region, flipped the extreme demand zone here, because as you can see, this demand zone could change the character to the upside, was leading to a bullish order for right here. Price mitigated this demand zone and flipped it from this supply. So this was the supply zone that gave the rejection after a liquidity sweeping movement. and reverse price to the downside aggressively. So the reversal has happened. What else can we see? The range high has been swept. We can see that there's still a range low. This is a range low. I mean, there's a liquidity trend line and there's a simple double or triple bottoms, but we will count the liquidity trend line. So there's a perfect liquidity trend line. And what do we know about ranges? If the upside is getting swept, then the downside will be swept sooner or later, and more likely sooner. So the upside has been swept with this movement. Supply has been mitigated. Reversal has happened. Downside range is still there. So we can expect on the sweep of this downside range. But of course, this is just the 4-hour chart. So we can't really predict what will happen in this New York session, because more likely price won't just come down to this region to sweep this liquidity. But yeah, we can expect in the further price action in the future that price will sweep this liquidity. Okay, so what else can we see if we zoom in? We can see that price couldn't manage to break the structure to the upside. I mean, the last recent break of structure was here with this movement, and this last recent break of structure left this last recent demand zone behind. So here was the last recent demand zone. Okay, this movement, sorry, my computer just lagged out. So this movement couldn't manage to break the structure to the upside with body closure, and it just rejected on this decisional, extreme, more likely 15-minute supply zone here, this region, because more likely the 15-minute change of characters happened here, and price rejected and reversed to the downside. And currently it's inside of this 4-hour zone, and it seems like that this 4-hour zone is technically will be broken. We will see it on the 15-minute chart. If this zone will be broken on the 15-minute chart, then we can consider that this last recent demand has been broken and the 4-hour character has been changed. And actually, we can print one more candle, I believe, because it's just 11, but it doesn't really matter. So, moral of the story: if the 15-minute chart closes below, then the 4-hour change of character will happen, and we can actually look for short trades, and we can. This is one more sign for the weakness of the bull run, which was actually just a corrective pullback of the weekly chart. And we can expect on the sweep of this downside liquidity. This is the whole higher time frame perspective. And sorry, let me just show you on the weekly chart that why are we expecting on a daily chart, why are we expecting bearish movements over the bullish movements? So as you can see, if we just take a look at this structure, down, corrective upside, down, corrective upside, down, corrective upside, down, corrective upside. So this is what price is doing, right? As you can see, here's the same pattern: corrective upside movement, sweep, downside, corrective upside, sweep, downside, corrective upside, sweep, downside. So this is what price is following. This is what we can expect from price. So actually, price reacted on supply zone, available supply zone, swept loads of liquidity, and started to change the character to the downside. It's time to change to the 15-minute chart and check if the zone has been broken. It has been broken. So the zone has been broken. This demand zone has been broken by body closure, several body closures on the 15-minute chart. So we can consider this zone as a body broken demand zone. Sorry, my monitor just moved away. Let me just fix it. Okay. And I just want you guys to mark the last recent supply zone. I mean, if you raise your hand, you can mark the last recent supply zone that has initiated the break. Michael? Exactly. And can you tell me why is it the right supply zone?
Because by that supply, the IFC was made and the money was injected in the market.
Exactly. Perfect. Why other reason? Last reason?
It flipped the last demand zone.
Yes. And one more reason. What makes it the correct supply zone? Why will it be a valid supply zone?
It created inefficiency in the market and broke the last demand zone.
And I'm looking for it. There's the answer. Well, thank you. In the chat.
I'm new in the
Liquidity.
group. Sorry. Oh, yeah, sorry.
There's liquidity. No problem, guys. Correct answers. Thank you for the answers. Don't worry. I was just looking for the last answer, which was the liquidity. There's liquidity below this zone. So on the 15-minute chart, this will be the last recent valuable supply zone that has in the brain fart again, that has started the break of this demand. So this will be the last recent supply zone, and we have liquidity below it. Okay, technically on the 15-minute chart, we can't really see other things that besides that this whole movement to the downside is the liquidity trend line. As you can see, this is just a whole liquidity trend line, liquidity. So in the future, we might be expecting upside movements again, but price has just showed a sign that it's actually bearish. It broke below the 4-hour demand zone. It created 15-minute supply zone. It created huge inefficiency. So it's not likely that price will reverse to the upside to sweep this liquidity from this liquidity trend line. More likely, the liquidity sweep at this region will happen from some deeper demand region. after price swept liquidity on the downside. So technically, in this session, we will be looking for shorts, right? So in this session, we will be looking for shorts. That will be our main plan, but we will have to switch to the 5-minute chart to see if we can take pullbacks up to this supply zone. But more likely that won't be a good idea. But talking about the 15-minute chart, that what could be our possible target point if we catch a short? Technically, there's this huge liquidity trend line. So as you can see, this is a huge liquidity target on the 15-minute chart, and more likely the last target point for us in this session could be this low point right here. I will just mark it. This could be the last low point we could target in this session. This is the less recent and last point of the liquidity which you can target. And more likely below this line, there will be a demand zone somewhere around here, not on the 15-minute chart, but more likely on the 15-minute chart. There is a valid demand. I mean, sorry, on the 5-minute chart or 1-minute chart, there is a valid demand zone. And yeah, but the safest way is to target the liquidity. You know, from the recaps, you could already recognize that I'm mostly targeting the liquidity, because after liquidity sweeping movements, huge liquidity sweeping movements, price usually reverses. And if price sweeps all of this liquidity from this trend line, more likely it will reverse to the upside. So that will be the last target point for us in this session. Of course, if we can catch a sell. And actually, looking at the 4-hour chart, looking at the 15-minute chart, we will be looking for shorts. If there won't be any short opportunities, then I won't be catching longs, because technically, if price, the only scenario if I will look for longs if price breaks over this supply zone. So if price flips this supply zone, then I will be looking for longs. But actually, every single time frame is showing us a bearish pressure. Price just actually shifted the order flow from bullish to bearish again and started to sweep the downside liquidity after the huge liquidity sweep to the upside. And every single time frame, higher time frame, weekly, daily, 4-hour, 15-minute is showing us that actually it's bearish. So we will be looking for bear opportunities. But this is just the 15-minute chart. So if I zoom in, last analysis of the 15-minute chart, if I zoom in, we can see that here at this region, there was no change of character to the upside, because this low couldn't manage to body break below the last low point. So this won't be a change of character here to the upside. This isn't a demand zone. More likely this will be liquidity for the shorts. So 15-minute plan. If price can come up to this supply, change character, we will be looking for shorts. If there's a more likely, there will be a 5-minute, because there's a buy to sell candle. So there's this buy to sell candle. Or if there will be any 5-minute supply zone that could give a reaction and that could change the character and that could give a good entry criteria, we will be looking for shorts. So if there's a 5-minute supply somewhere around here or somewhere around here, or actually here that reverse price to the downside, we will be looking for shorts at any cost, right? So this is the plan. We are not looking for longs, we are looking for shorts, because short is the major trend on the higher time frame, on the lower time frame. So if any 15-minute/5-minute zone can give us a reaction, then we will be looking for shorts. That's the plan. Let me just switch to the 5-minute chart. Yeah, that's the exact same buy to sell candle. And let's see what has just happened. On the 5-minute chart, there was no change of character to the upside either. As you can see, here's the last recent supply zone that has caused the last recent inefficient break of the structure to the downside. So this is the last recent supply zone, because you know, prices were coming down, coming up, broke the structure here with this movement. Technically, the wick is the correct zone in this case, because you know, it's just a weak zone. We already learned why we use weak zones. This is a weak zone entry. I mean, not entry, but weak zone in this scenario. So yeah, we have 3 supply zones. If any of the supply zones can give us a reaction, on the 1-minute chart, of course, we will be looking for longs. So not longs, or oh my god, no longs, shorts. We will be looking for shorts. Actually, this looks like a really simple plan for today. Mainly, in other backtesting sessions, we just made complicated plans where we had 5 or 6 outcomes. But in this case, I wouldn't really actually pay much attention to long opportunities, because every single outcome is showing us that price is going to the bearish side, price will go short, and we are just following the main trend. If you know me, I don't really take counter trend trades. I just only execute 99% of the times I only execute pro trend trades, and there's liquidity target to the downside to lower time frame liquidity target. There's higher time frame liquidity target here, as you remember, on trend line liquidity, and this is the lowest point. So yeah, that's all about the higher time frame. It's not really complicated. It's actually pretty fucking simple. And yeah, moral of the story, we are waiting for shorts. And let me just check if there was a demand reaction at this reversal point. The 15-minute chart. No, technically there wasn't a demand reaction. This demand where price was reversing here at this region was already mitigated. So there was no demand reaction. Price just created another bottom. As you can see, first bottom, second bottom. Technically, this is a really fucking good liquidity line. So yeah, Price is just showing that it's going bearish. It just reacted on, it just reversed in the middle of nowhere. So it was a middle of nowhere reversal. This low will be weak. This will be targeted. This will be taken. This will be ran. And yeah, we are looking for shorts. That's it. Price has a reverse in the middle of nowhere. So let me just delete this line and start the backtesting on the 1 minute chart. This was actually pretty fucking simple. Higher time frame analysis. Was it understandable? So we can start the 1 minute entries. All right, perfect. Thank you, guys. Remove your drawings, please. Thank you. Removing. Okay, perfect. So that's it. I will just mark this demand because this is still a demand on the 1 minute chart, but this will be liquidated. This will be ran. I believe it's part of the 5 minute. No, this will be flipped. This will be broken. This will be a ran. This is liquidity. So more likely, if price can reverse up to a supply zone here, give us confirmation, run up to this supply zone, give us confirmation, run up to this supply zone, give us confirmation, then we will be able to take shorts. That's our major plan for today, for this backtesting session, of course. And let me just start. And no, in the meanwhile, I don't really want to take longs. I don't want to take longs after this supply zone. If price reverses here and taps this demand zone and flips this demand zone, then of course there will be a new plan. I forgot to say this. If price taps this demand, flips this demand, then there will be a new plan. We will be able to take shorts once again. But no, I won't be taking longs because every single time frame is just simply bearish. Price couldn't even change the character on the 5 minute chart. So yeah, we will be just looking for shorts. I won't be able to take longs at this region, even with a strong change of character. I won't be taking that because just look at the fucking 4-hour chart. It's just insane how bearish it is taking longs in this region. If you will take longs in this region, you will be stupid. I would call you stupid because it's actually a stupid thing to take longs after this bearish pressure. So straight back to the 1 minute chart. I'll just boost it up. Okay. Price is approaching the first supply zone and seems like it broke above the supply on the 1 minute chart. And presented a huge fucking reaction. Okay. A question, sorry. There's liquidity. There's actually liquidity. I forgot to mark it. Here's the relatively first tap, second tap, and technically third tap, but I will just call it this liquidity line right here, 2 equal taps. So this will be liquidity for us right here. Question to you guys. Question to you. What will you do in this scenario? What should we check in this case? What are we waiting for? What should we check? Let me just check. That was million.
We need to check higher time frame.
Thank you. Very, very good. Very good. Thank you. Exactly. We should check the higher time frame because there was liquidity. There was liquidity, and as you can see, this actual movement that broke the supply zone on the 1 minute chart close below the 5 minute. I mean the 5 minute zone, right? So on the 5 minute chart, this candle, these candles close below the 5 minute zone. So technically, this is just a liquidity sweep of this 5 minute zone because price presented an extremely V-shaped recovery with really fucking inefficient movement to the downside that has changed character here immediately. So we know that price is just simply wicked above and swept the liquidity, and there was double taps. First tap, second tap, price just swept this liquidity. I just recognize this. Let me just check it on the 1 minute chart also. Yeah, there was double taps, perfect double taps. First tap, second tap, price swept the liquidity and reversed to the downside immediately. So the reversal has happened. Okay, actually, in this case, I would hop in a trade. Let me just check if there will be another liquidity creation. Actually, okay, I would jump in this trade. Let me just count the criteria. This is a really, really good criteria entry, it seems like. This supply zone caused inefficiency. So let me just track the criteria. Okay, here's a text. First, base criteria. First base criteria, higher time frame tap, right? So there was a higher time frame tap. Second, asking you guys, what is the second criteria? You can use the chat. Exactly. Thank you, Bailey. Inefficiency. What is the third criteria? Liquidity. Exactly. There was liquidity taken into the supply zone. Liquidity has been swept into the supply. What is the fourth criteria for the pro trend? Exactly. All of the base criteria are ticked, so we can look for a trade opportunity, right? So if all of the base criteria are fit, we can search for a trade. We can add our variable criteria. If any of these criteria are missing, we are not ending our variable criteria. Second, variable criteria. I will help with the first one. It was a change of character. The first valuable criteria is a change of character. Let me just mark it here. And of course, I will mark everything after that. What is the sixth criteria? What is the sixth criteria? 50% mitigation, right? Exactly. After it, V-shape recovery. V-shape recovery has happened. Okay, what's the eighth criteria? What is the eighth criteria? Not coming from opposite sided zone. Exactly, price just broke below this zone too, so a strong change of character has happened also. Not coming. Ninth criteria. Corrective pullback. Strong pro movement. Strong pro movement. Okay, and are there any more criteria? This is 9 so far. If there will be combined liquidation, we will be, of course, taking the combined liquidation criteria. It seems like price is creating combined liquidation, but yeah, technically we could consider this as combined liquidation, but not yet. If price reverses here on this step, I will consider it as combined liquidation. Okay, it's combined liquidation. Perfect. Double taps below it. There's liquidity. That has been already swept. But yeah, that could be combined liquidation too. But price just created more liquidity for this zone itself, and not for just this region, because this liquidity has been swept right here, and price just created more liquidity for this zone. So technically, this liquidity will be swept into the zone. Okay, so in this case, sorry, let me just mark the combined liquidation. Combined liquidation, and okay, you left out one more criteria. Thank you, Trips. There's the last criteria: liquidity to target. You remember there was huge liquidity on the lower time frame. There was really huge liquidity on the higher time frame there, if you remember. So let me just count the criteria. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Is it actually a full criteria trade? Yeah, it's actually a full criteria trade. And yeah, I will just simply settlement order on this supply zone, the 50% of this supply. And we'll use, actually in this case, we'll use 3 pip stop loss. That looks more promising than the 2 pip stop loss. 2 pip can't even cover the zone. As you can see, it barely covers the zone. So in this case, I will just use the 3 pips. Mainly, if a 2 pip stop loss can't cover the zone, but you could also already seen it from the recap videos. I've already explained it. So if the 2 pip stop loss can't cover the zone, I'm just buffering my stop loss to 3 pip. And yeah, let me just mark the criteria. And I mean, explain the criteria. So higher time frame. You know, here was the higher time frame tap, not trap. Here was the higher time frame mitigation, and price closed inside of this higher time frame on the 5-minute chart. Inefficiency, there's inefficiency. There's inefficiency, and of course, this zone, higher time frame zone, has caused inefficiency too. Liquidity to take. Here was the liquidity to take for the higher time frame zone. Pro trend, of course, it's a pro trend because 4-hour, 15-minute, 5-minute, 1-minute, everything is bullish currently. Variable criteria, change of character. It doesn't really require that much of an explanation. There's a change of characters. There's a strong change of character here, actually, with a small wick below. Okay, marked, perfect. V-shape, price reacted, presented a V-shape, rich area V-shape. Not coming, price didn't mitigate the zone. It just broke below this 1-minute zone and presented a strong change of character. Counter trend, pullback movements, and strong pro movements. Of course, you can literally see that the shorts are much stronger than the long movements. And last, combined liquidation. There's liquidity to take for the 1-minute character changing zone. So this is combined liquidation, and this is like liquidity to target right here and on the higher time frame too. So technically, this is a full criteria trade. I will keep this unit order here, and the target point. Because price is presenting an extremely fucking bearish pressure, I will just simply target this low point, this last point of the liquidity, with a swing target point. And you could already recognize that mainly, I'm booking pretty much high risk reward ratio lately in the last few months, in May, July, June, August, because I'm catching, technically I'm only catching pro trend high probability trades, and I'm letting them run to actually 1-to-30, 1-to-4 risk reward ratio. Because I know where the liquidity is, I know where the price has a chance to reverse. And if you can catch a fractally confirmed trade in a pro trend, that has actually really high potential to run down to 1-to-30, 40, 50, 100. And yeah. Pedro.
Yeah, Marcel, I have a question. The price don't show gaps. Is this still inefficient? Yeah.
Weak
Okay, I
Weak.
see. I see.
inefficiency.
Okay, okay.
There's inefficiency, and this didn't fill up it yet, as you can see.
Okay, I see. Thank you.
You're welcome. So let me just see if we get the tag. Okay, there's a lower liquidity time, lower time frame liquidity take target, sorry, liquidity target right here. While, what's your question?
Sorry, Marcel, I have two questions, please. The first one, we know that if we have 15 or 5-minute demand, we cannot consider this one as a flipped or broke unless we have 15 or 5-minute candle close with body close above it or below it. Now, with the 4-hour, why you didn't wait for the 4-hour candle? This is my first question. Why we approved the 15-minute candle?
Because here was
consider this
liquidity.
4-hour.
Here was liquidity. Liquidity has been swept, and we already know the rule by liquidity sweeps. If there's liquidity above supply zone and it's getting swept and it closes inside of the supply zone, then of course it was just a sweep and not a break, right?
Not this one, Marcel. The
I know the
4-hour
4-hour.
demand
I know the
zone.
4-hour, but already the 4-hour has closed below it too.
Okay. So we
4-hour
should
closed below.
consider only
And
the
actually, this is a
4-hour.
spoiler the whole thing. The price will just go the fuck down. So thank you, man.
I'm sorry. The second question about the change of character. Now we know that a change of character by wick, it's approved. We can take it. My question here that we are taking the change of character on the 1-minute zones, or like if we are going to the 1-minute short.
Okay,
Is
sorry.
the wick-
Please. As this once again at the end of the session,
Okay, خلاص.
there will be a question and answer. So you'll be able to ask it. Okay.
Okay.
Perfect. So we are in the trade. Currently in the trade. Perfect. And 1-minute change of character happened here to the downside. So in this case, what should we do?
Break even.
Break even. And if I just play price forward, price actually swept us out. And this could have been a break-even trade too, and this could have been a stop loss trade too. If you didn't set a break-even right here, then this would have been a stop loss trade. If you did set a break-even, then this was a simple break-even trade for us. Okay, as you can see, that's it, guys. 11 full criteria trade, break-even or stop loss. Perfect. Word doesn't stop here. We have to keep looking for trades. So with the same progress, with the same criteria tracking, with the same repetitive progress, we have to keep tracking the trades. We have to keep monitoring. If we take a loss, if we take a break even, we don't have to give a shit about it. All we have to do is repeat the same progress over and over again, every single day, every single hour, every single session, every single minute. If you take a loss, if you take a break even, just fuck it. Who the fuck cares? We will take lots of break evens. We will take lots of losses too. We just have to repeat the progress, repeat the criteria tracking, repeat the monitoring. So we already know the plan. If price can react on any of these supply zones, we will be able to take a trade. Would you set break even in this case or no? Yes, I will do. Mainly I do, because price body broke below this low point with a clear intention. I will actually I'm in the break even. Okay. Let me just check the 5-minute chart. That's actually a pretty shitty candle. Buy to sell candle, not that much of a power. But yeah, price broke about this buy to sell candle. And this is still not a 15-minute change of character. This is still not a 15-minute change of character. 15-minute change of character will happen here at this 15-minute supply zone. I do not consider buy to sell candles or sell to buy candles as change of character points, but I've already explained it. So yeah, price just broke over this buy to sell candle and reversed aggressively to the downside. Question. This demand is the cause of the break of the buy to sell candle on this 5-minute supply too. And of course, our supply, which we took an entry on. Would you enter on this demand zone? This is my question. Sorry, let me just. Yes, no. Would you enter on this demand zone in a long trade? And just simply circle on my screen. Of course you wouldn't. Of course, because you're smart. Of course, because you know what to do. And entering on these 1-minute demand zones is not what I thought you. So I'm really proud. I'm really proud, guys, that you actually think that you wouldn't enter. I want to see the same thing in the live trading session, because of course, I'm here, I'm explaining, I'm telling you everything, and I'm showing you the charts. It's a bit easier to understand, but I want to see the same discipline in your own live trading too, because if you have a clear trend in live trading session, for example, tomorrow we will have a clean trend on the 4-hour, 15-minute, 5-minute, 1-minute, and it's showing us that it's bearish. And I don't want to see you guys taking longs in these kind of scenarios, or if every single time frame is bullish, I don't want to see you taking shorts. I want to see the same discipline in live trading as in backtesting or as in a backtesting session. I want to see the exact same discipline. Because if you wouldn't take this trade in a backtesting session, then you shouldn't take it in live trading session too. Okay? Because some of you guys, actually not many, but few of you guys are taking these trades because you are getting dragged up by your emotions. You are seeing a change of character on the charts. You are seeing a break of structure to the upside. 1-minute demands on that trade inefficiency, and you are getting dragged by your emotions. And you are getting forced into a trade, a bad counter trend trade by your emotions. And this shouldn't happening. You should actually present the exact same discipline in live trading as in backtesting session. And the only way to train it is by actually backtesting and live trading at the same time. You have to keep backtesting, you have to keep live trading, because chart time and experience is the only thing that will actually train you for this. And yeah, sorry for the psychological thoughts. Just the passion drags me away. So would you enter here? Of course, we wouldn't. There might be a good entry that there's a possibility that this demand will hold and actually shoot the fuck price up to this supply zone or to some higher region, but there's no high chance for this. And actually, booking profit on a bad trade is worse than losing on a good trade. Because if the market is rewarding you for taking a really fucking bad setup, and it's giving you risk-reward ratio, giving you profit, giving you money, is actually even worse than taking a loss on a really good trade. Because if you're taking a loss on a really good trade, on a high criteria trade like this, you keep following your edge. Your edge is working. Your edge is working on the long term. You will be profitable on the long term if you're following the edge. If you're taking these shitty setups and you're booking profit on it, you will actually see a false edge. You will be dragged by your emotions. You will be dragged by your false edge, and you won't be profitable in the long run, because this is showing you false statistics, and you only have to keep repeatedly executing your edge, nothing else but your edge. So that's it. That's it. Fucked up. Every single buyer have been fucked up. Every single buyer have been fucked up. Still on the bearish side. We are still on the bearish side. We are still looking for shorts. We don't care that we took a loss here. We don't care that price just simply 1 minute broke structure to the upside. Who the shit gives about anything about the 1 minute chart? Who gives shit about the 1 minute chart when every single time frame is bearish? We are keep looking for shorts. If price reverses and somehow breaks above the supply zone here and creates a 15-minute change of character, then we will be looking for longs maybe if price can give a good entry criteria right here for a long trade. But unless it happens, we are on the short side. If you can't even take a single trade from this region till the end of the session, we won't be taking a trade. If there won't be a trade for a week, we won't be taking a trade for a week. That's it. That's how the long-term plan works. You have to keep following this long-term plan, because if you're not following and you're just jumping on random shitty 1 minute order blocks, you will be lost in the market and you will be fucked up, and you will be unsubscribing from me because you will say that this flipping markets is shit because he's teaching shit and he doesn't know shit about the market. This will happen. But if you keep following the plan, your edge, there might be days when you won't be able to trade, and not every single day is a trading day. There will be days, not just might be, there will be days when you won't be able to trade. But actually, the days when you will be trade will be rewarding you as fuck. Just look at my previous month, look at my August. And sorry for the psychological talk. Just let me know if I'm bothering you. I will stop and continue with the backtesting. But just look at my August, look at my previous month. You know, I booked around 30 risk-reward ratio till the end of the month. And actually on the exact last day or the day before the last day, I just booked, I don't know how was it, 21 risk-reward ratio. That was like 21 or 25 risk-reward ratio on a single trade. And it boosted my overall risk-reward ratio after a month to 1:50 risk-reward ratio collected in a single month. And by only taking around 10 or 15 trades, as I remember well. And just calculate it. I actually took 15 trades in a single month. Some of you guys taking 10 trades a day. 10 trades, fucking 10 trades a day. I took 15 trades in a month. That means that actually I didn't even take trades every second day or so. I just took trades every third day. And you have to keep following this edge because, you know, just keep a look at my statistics. I took like 7 or 8 losses. I took 6 break-evens and I took 7 wins. So my overall win ratio was like 35% or 30, 33, I don't remember. But I was still profitable, and not just simply profitable with 5 risk reward ratio. I was profitable with 50 risk reward ratio because of the fucking long-term plan, because I kept following my edge. And yeah, dragged away by passion, by emotion. Sorry, once again. Continue with this. So no fucking way I will enter in a trade right here. No fucking way. Keep monitoring. Actually, there's a chance that price will reverse on this demand zone because you know there's a huge liquidity to take about it. So there's a chance that price will reverse here, create a one-minute change of character, but we won't jump on that change of character. If price, for example, breaks this high point or this high point, then I will be jumping a long trade. But no, if price fakes us here, that will be a fake change of character and will be dragged away because this is part of the liquidity too. Let's see. Let me just check the 5-minute chart. Oh, actually, there's, sorry, one more demand zone that has been formed right here. There's one more demand zone that has been formed right here that initiated the breakout structure here to the upside and had liquidity below it. I couldn't even recognize it. I mean, above it. Here's liquidity. Okay, let me just, I will delete it because this is heavily part of the liquidity. There was liquidity for this 5-minute demand zone that has broke the structure to the upside. And this demand zone gave us a not confirmation, sorry, a reaction here that couldn't change character here to the upside, and price after it broke structure to the downside here and still in the demand zone. Sorry, I wasn't focusing on the technical side. I was just dragged away by the psychological part. Okay. So currently we are inside of a 5-minute demand zone, which is still part of the liquidity, which is still fucking liquidity. Every single demand zone in this region is liquidity. Just keep remembering for this because we are in a backtesting session. It's easy to remember for these, right? Because we just played this price action region like 5 minutes ago. But in live trading, this has happened 2.5 hours ago. So you have to keep in mind the overall price action, the overall trend during the whole session. And you can't be dragged away by this random change of characters, 1-minute change of characters to the upside. You have to keep the perspective in your head. That's why you should make markup. That's why you should follow my markups, because in the markups, we are showing what the perspective is. And that won't change unless price breaks above 15-minute or 4-hour zone, of course, but that won't change in 1 or 2 hours. But if it changes, I'm updating you, you know. But that's why you have to keep the perspective in your mind. So what will we do in this case? We will wait for a strong change of character to the upside and take longs, which is least probable, and I probably won't do this, or we will be waiting for the flip of this 5-minute zone, or the break of this structure here, or the break of this structure here, or breakout structure, flip, breakout structure, and wait for a short opportunity to present here. Technically, this will be the best scenario. If price can present a short opportunity here, then I'll be taking the short and I'll be targeting the exact same liquid line right here. So yeah, let's see. I believe that wasn't a break. I don't want to spoiler it, but I believe on the 5-minute chart, this wasn't a break still. This could have been just a liquidity sweep on the 5-minute chart, but I don't want to spoiler it. I don't want to spoiler it because if I switch to the 5-minute chart, the next candle will be spoilered and I will be seeing the next candle. And, you know, that isn't so good. Okay, now it's more likely broken. Switching to the 5-minute chart. Yeah, it's broken now. As you can see, it has been body broken. Flip has happened. Because, you know, if I'm at this region, I mean, this candle passed by. On the 15-minute, this can on the 5-minute, sorry, this candle has been printed. And for example, 4 more 1-minute candle is being printed. Then if I switch to the 5-minute chart, this whole movement of the 5-minute chart will be shown. Because if price prints 4 candles right here, 1, 2, 3, 4 1-minute candles, and 1 minute is currently right here, then if I switch to the 5-minute chart, then the last piece of the, last 1-minute candle will be shown too in the form of a 5-minute candle. And literally this can spoil our whole backtesting session and can ruin your backtesting session, just like while ruined my backtesting session with a 4-hour chart. So yeah. And yeah, here was a flip. Actually, I was joking. Don't take it personal. Here was a perfect flip. And yeah, what can we see? I can see a pretty fucking good entry opportunity once again. I can see a pretty fucking good entry opportunity. Oh, sorry. That's it. This is a 1 minute, exactly, chilling markers. This is a 1 minute continuation flip with perfect liquidity creation, with perfect inefficiency. And question here, whoever raised, C-Boy, please, you can ask your question after the session. I mean, in the question and answer section. So, question here, whoever raises their hand first can answer. Can we open a position here on this supply zone? Kaizen?
No, because it's part of the liquidity.
Exactly, we can't and we won't. We will be waiting. So, I will be just setting a limit order here on this zone because the actual fourth plan or third plan for this session played out. Because just remember, if price flips this zone, and actually the extreme has been flipped too, but this 5 minute have been flipped too. So if price flips this zone and creates a good entry criteria, good cancellation criteria, as I draw it here, we'll be able to take a short. And let's just count the criteria. Once again, I will count it because it's easier. First, higher time frame tap. Technically, let me just check if this is a higher time frame. It is actually. So the 1 minute zone is part of the higher time frame. So actually, there will be a higher time frame tap too. And actually, the whole 5 minute is almost like the 1 minute. So this will be a higher time frame tap. But this is just a simple continuation trade, so you can't really track these criteria the way we track for the reversals, because those criteria are mainly for reversals, right? So if price reverses on a demand zone, for example, like this, we'll be able to track those criteria on higher time frame zone. But in a continuation, it's harder to track the criteria. We only take continuations in a pro trend. So technically, price is already coming from a higher time frame zone somewhere around here, and already created the needed criteria to continue the pro trend. So continuation criteria are a bit different. But I'll just count them. So, okay, higher time frame. Liquidity. Pro trend. Inefficiency. These are the base criteria, right? So this is part of the 5 minute zone. So this is a higher time frame, but this will be a higher time frame tap right here. This is a liquidity. This is inefficiency. And of course, this is pro trend. We don't have to explain why is it a pro trend. And of course, this was a flip trade. Flip. Strong pro, not coming. What else was the liquidity take? I mean, target, sorry. I believe there's no combined liquidation because, you know, this is the only liquidity that we can see because the liquidity has been swept on this side. I mean, on the buy side and not on the short side. What else do we have here? Technically, we can't really count a V-shape on the cancellation trade because, you know, it will be a cancellation. But if price simply touches this zone and reverses here and creates a confirmation entry, we have to count new criteria for that kind of a trade because, you know, that will be a 5 minute zone tap and reversal trade and not a cancellation trade. So in the cancellation trade, technically, these are the criteria that we can track. So yeah, this. Let me just explain. This is a really fucking high probability setup. This is a setup that I would take any fucking day, any fucking time. And it's, as you know me, and if you saw all of the recaps, 70% of the time I'm taking these trades, right? So yeah, I will take this trade any day. More, okay, that was actually more liquidity that I forgot to track. Okay, did we just get swept out? No, that wasn't a sweep. Okay, wait. Let me just see. Okay. No, we are not getting swept out. We are in break even now. So targeting this low point. I mean, this isn't a low point. This is a liquidity point, liquidity to target. And technically we are in break even because price broke below this low point. I was a bit unsure about the 5 minute supply with no inefficiency, but of that I didn't take the trade. Because of that, I didn't take the trade. Chilling markets, do you actually remember for this day? Okay, that's nice. You have a good memory. Yeah, on a funded account, that could be a stop loss with the slippage because funded accounts have a really fucking bad slippage. But on IC markets, it wouldn't be. If you use the 2.5 pip stop loss or a 3 pip stop loss, this wouldn't be. Or in this case, I would use a 2 pip stop loss because it can easily cover the hold zone. And in IC markets, it would actually keep me in the trade. Session also ended. Yeah, I know already. Session has ended right here, but we are still in the trade and we are letting it run. Let me just see the first target point. If we are managing this trade not so aggressively, aggressively, then the first target point will be the slow point, which is the liquidity to target, sorry. And that has been hit. So the first target point, the aggressive manage has been hit. And if you manage the trade like I do, so I'm keeping these practically comfort liquidity scenario setups to actually liquidity to target points, then this trade will be 1:28 restore ratio. Let me just switch to the 15-minute chart and see if it actually hits. Yeah, I'm switching to the 15-minute chart because we can't look for any more 1-minute opportunities because session has ended. So it's actually unnecessary to check the 1-minute chart. Okay. Yeah, liquidity ran. As you can see, this was the last point of the liquidity. Swept. Price didn't even close below that line. Just look at the perfection. Price didn't even close below that line. Okay, it closed below the next line. Next candle a bit, but price just reversed immediately after the liquidity sweep. And this is the power of liquidity. This is the power of liquidity. And I'm sure that if I continue to play price forward, it will reverse to the upside. Yeah. This is the power of liquidity. So technically, this would have been a hit. 1:29, 28. I don't know. This is an 8. Yeah, this is an 8. 1:28. But if you manage it aggressively, this would have been a 1:7 roughly. But if we manage to close it at 1:10, that would have been hit perfectly. So technically, that's it, guys. That's it. We took a loss. I will count it as a loss. More likely, if I would have been in this trade, I would have let it run down to this swing low point and this liquidity point. So I would have booked 1:28 restore ratio on this trade, -1 right here. So actually, this was a pretty fucking good session because, we followed our plan. We actually followed our plan on both of the trades. We only took two trades, 11 criterias and high criteria cancellation trade. Actually, it was a really, really good cancellation trade, which I will take any day. So yeah, overall, a pretty good session. If you have any questions, guys, please collect them. I'm going out for a cup of water and be right back in a minute. And sorry, I will just pause the recording and stop the recording because I won't record the question and answer section. So yeah, collect your questions. Be right back in a minute.